Apple just crashed through critical support and the signals are flashing red. Is this the start of something worse, or are we finally getting that buying opportunity? Let's find out. Apple closed at $248.80 today, down 1.6%. But here is what matters. The stock is now sitting right on top of its 200-day moving average at $248. That is a line that is held for months. The composite score dropped to -41, one of the weakest readings we have seen this year. So the question is simple. Are we looking at a real bottom forming here, or is this just another leg down waiting to happen? Let's start with the trend, because this tells us the big picture. Apple is trading below both the 20-day moving average at $254 and the 50-day at $259. Think of these like resistance levels now. The 20-day shows us short-term momentum, and right now that momentum is down. The 50-day is the intermediate trend, also pointing lower. But here is the key detail. Price is sitting right at the 200-day moving average at $248. This is the long-term trend line. Historically, when Apple touches this level, it either bounces hard or breaks down significantly. We are at that decision point right now. Now let's talk momentum, because this is where things get interesting. RSI is at 37.9. RSI measures whether a stock is overbought or oversold on a scale of 0 to 100. Below 30 is oversold territory. We are close but not quite there yet. The MACD, which tracks the relationship between two moving averages to show momentum shifts, is showing deterioration. That means momentum is weakening, but we have not seen a crossover yet. No bullish divergence either. When RSI makes higher lows while price makes lower lows, that is divergence, and it signals a potential reversal. We do not have that confirmation yet. Volume is critical because it shows us what smart money is doing. The money flow index is at 41.7, which measures buying and selling pressure. Below 50 means more selling than buying. We are seeing distribution, not accumulation. If institutions were loading up on Apple at these levels, we would see volume spikes on green days. Instead, the volume pattern is neutral. That tells me the big players are not convinced this is the bottom yet. The price pattern here is lower highs, which is a textbook bearish structure. Each rally attempt is getting rejected at a lower level than the previous one. We do have a Bollinger Band squeeze forming, which is interesting. Think of Bollinger Bands like a measure of volatility. When they squeeze together, it means the stock is coiling up for a big move. The problem is, a squeeze can break either direction. Right now price is hugging the lower band, which typically signals oversold conditions, but without a clear reversal pattern, we cannot call this a bottom yet. From a market structure perspective, we just had a bearish break of structure. That means price took out a recent swing low, which tells us sellers are in control. The ADX is at 22.2, which measures trend strength. Below 25 means the trend is weak or choppy. So we have a bearish structure, but without strong conviction. There are no order blocks nearby, which are areas where institutions placed large orders. That means there is no obvious zone where smart money is defending a level right now. Support is at $246.73, just below the current price. If we break that, the next support is not until much lower. Resistance is stacked above us. First level is $257, then $261, and $266 beyond that. That is a lot of overhead supply. For bulls to take control, we need to reclaim $257 first. Okay, so here is my call. This is a trap, not a bottom. At least not yet. Here is why. 1. We have no bullish divergence on RSI or MACD. 2. Volume shows distribution, not accumulation. 3. The price pattern is lower highs, which is bearish structure. 4. We are sitting on the 200-day moving average, but there is no bounce confirmation yet. And 5. The MACD is deteriorating, meaning momentum is still weakening. Yes, we are oversold and a Bollinger squeeze is forming, but those are not enough without confirmation. This could easily break lower. Now, what would flip this to bullish? We need three things. First, a strong bounce off the 200-day moving average with volume. Second, RSI needs to reclaim 40 and start forming higher lows. And third, price needs to break back above $257 with conviction. If those three things happen in the next few sessions, then we can talk about a real bottom forming. Until then, this is a wait-and-see situation. On the flip side, here is what breaks the thesis completely. If Apple closes below $246.73, at support level, we are likely heading to the 230s. The 200-day moving average failing is a major technical breakdown. It would confirm that the trend has shifted from long-term bullish to bearish. Watch that 246 level closely. A break there with volume is your exit signal. 3 key takeaways. 1. Apple is at a critical decision point on the 200-day moving average. 2. Momentum and volume are not confirming a bottom yet. And 3. This looks more like a trap than an opportunity right now. Wait for confirmation before jumping in. If you want more deep dives like this, hit subscribe and turn on notifications. Next up, we are analyzing Tesla, which just triggered a completely different signal. I will see you in that one.